Friday not being a very good day for the indicators for Indian economy. If you look at the India's factory output, it actually entered the negative territory in March. After a gap of 21 months, it actually contracted by 0.1%, which is absolutely it's a signaling in a slowdown both in consumption as well as the investment activities. If you compare it to the February numbers, the IIP was almost flat, which grew at 0.1% then. And also comes at a time where the way that the GDP is, there's already an overhang on the way that the GDP is being calculated. So not a very good day for the way that the data indicators for the economic growth are coming out. If you look at the data released by the CSO, which is the Central Statistics Office on Friday, manufacturing output, which has around 78% weightage in the index, in the IIP, it contracted by 0.4% in March, while mining and electricity output grew by 0.8% and 2.2% respectively. So if you look at the data, it shows that the production of two-wheelers, auto component, were the highest negative contributors. Now, if you juxtapose it with the Siam data, which is the Society of Indian Automobile Manufacturers data, which came last month, it had already signaled a slowdown in urban demand because the car sales grew by 2.7% in 18-19, which has been the worst performance in the 5 financial years. So now, if you look at the way that the IIP, because 12 out of the 23 industry groups in the manufacturing sector have shown negative growth during March. So leave automobiles, even consumer durables and non-durables, they haven't shown very good performance. The only segment which has absolutely done very well is consumer electronics, going at around 10.6% in March. This comes at a time when there is an overhang over the way that the GDP numbers are being calculated. Now, Indian economy grew around 6.6% in December quarter, which was the slowest growth in the 5 quarters, and which has already resulted in a lot of the statistical institutions also, apart from here in India, even the IMF, cutting down on the growth forecast. So for example, the CSO, which is the Central Statistics Office, it in 2018-19 trimmed the forecast to 7% in February from 7.2% estimated in the previous month. Now, if you look at IMF, which is the International Monetary Fund, it last month cut India's GDP growth forecast for 19-20 by 20 basis points to 7.3%. And this was a similar action which was taken by ADB and the RBI. So going forward, it's left to be seen how the final numbers when they stack up, but not a very interesting spot for the Indian economy to be in.